Ethereum is an open-source, decentralized blockchain technology. Ethereum's native coin is called Ether. This coin is one of the largest cryptocurrencies by market capitalization, second only to Bitcoin. Although Ether has a smaller market cap than Bitcoin, Ethereum is the most widely used blockchain. One thing that is important to understand about Ethereum is that it is not the same as Bitcoin. Whereas Bitcoin's purpose is primarily to be a digital currency, Ethereum is much broader. In fact, Ethereum is an open-source operating system and computing platform. It also supports distributed applications and smart contracts. Welcome back to Operation Stock Market. Guys, please hit the like button on this video. If you're not subscribed already, I request you to hit the sub button. Now, what's happening to the Ethereum pricing? According to Ethereum, it can be used to codify, decentralize, secure, and trade just about anything. One of the biggest projects around Ethereum is Microsoft's partnership with Consensus, which offers Ethereum Blockchain as a service on Microsoft Azure, so enterprise clients and developers can have a single-click cloud-based blockchain developer environment. In 2016, Ethereum was split into two separate blockchains, Ethereum and Ethereum Classic. This was after a malicious actor stole more than $50 million worth of funds which had been raised on the DAO, a set of smart contracts originating from Ethereum software platform. The new Ethereum was a hard fork from the original software intended to protect against further malware attacks. As of September 2019, Ethereum was the second largest virtual currency on the market, behind only Bitcoin. It is much faster to acquire Ether currency than Bitcoin, about 14 or 15 seconds to Bitcoin's near uniform 10 minutes. And there are far more Ether units in circulation than there is Bitcoin. Blockchains are online ledgers that keep permanent tamper-proof records of information. These records are continually verified by a network of computer nodes similar to servers, which are not centrally controlled by anyone. Ether is just one of 8,000 cryptocurrencies that use some form of this technology, which was invented by the anonymous Satoshi Nakamoto when he released Bitcoin over a decade ago. The Ethereum blockchain was first outlined in 2013 by Vitalik Buterin, a 19-year-old prodigy who was born in Russia but mostly grew up in Canada. After crowdfunding and development in 2014, the platform was launched in July 2015. As with the Bitcoin blockchain, each Ethereum transaction is confirmed when the nodes on the network reach a consensus that it took place. These verifiers are rewarded with Ether for their work, in a process known as mining. But the Bitcoin blockchain is confined to enabling digital, decentralized money, meaning money that is not issued from any central institution, unlike, say, dollars. Ethereum's blockchain is categorically different in that it can host both other digital tokens or coins and decentralized applications. Decentralized applications, or dApps, are open-source programs developed by communities of coders not attached to any company. Any changes to the software are voted on by the community using a consensus mechanism. Perhaps the best-known applications running on Ethereum blockchain are smart contracts, which are programs that automatically execute all of the parts of an agreement when certain conditions are met. For instance, a smart contract could automatically reimburse a customer if, say, a flight was delayed more than a prescribed amount of time. Many of the dApp communities are also operating what is known as Decentralized Autonomous Organizations, or DAOs. These are essentially alternatives to companies and seen by many as the building blocks of the next phase of the internet, or Web 3.0. A good example is the burgeoning trading exchange SushiSwap. Ethereum has evolved and developed since its launch 6 years ago. In 2016, a set of smart contracts known as the DAO raised a record of $150 million in a crowd sale, but it was quickly exploited by a hacker who siphoned off 1/3 of the funds. However, since then, the Ethereum ecosystem has matured considerably. While hacks and scams remain common, the overall level of professionalism appears to have improved dramatically. Here are 3 factors to consider. Number 1, cryptocurrency guidance for banks. The Office of the Comptroller of the Currency published Interpretive Letter 1174, which explains banks may use new technologies, including independent node verification networks and stablecoins, to perform bank-permissible functions, such as payment activities. A bank may use stablecoins to facilitate payment transactions for customers. In doing so, a bank may issue stablecoins, exchange stablecoins for a flat currency, as well as validate, store, and record payment transactions by serving as a node on a blockchain. This is big for the Ethereum community, as stablecoins are Ethereum tokens designed to stay at a fixed value, even when the price of Ethereum changes. By using stablecoins, you're literally using Ethereum as a network infrastructure. Number 2, Ethereum 2.0. Ethereum 2.0 has long been anticipated and much discussed in the blockchain ecosystem. Proof of stake and sharding will bring considerable improvements to scalability, security, and accessibility. For Ethereum holders, Ethereum 2.0 provides a new opportunity to participate and receive rewards for maintaining the network. The most important advantage of Ethereum 2.0 is its scalability. Ethereum 2.0 will have shard change, due to which it can conduct up to 10,000 transactions per second, whereas Ethereum can support only 30 transactions per second. This also leads to a lot of delays in network congestion, which will not be the case in Ethereum 2.0. The implementation of shard chain speeds up the network and can scale more easily as the transactions are handled in parallel chains instead of consecutive ones. Number 3, the stimulus package. The Biden stimulus may add an extra jolt to Bitcoin's price, but nothing more than pushing along a barreling freight train, says Jaehan Chu, managing partner at Hong Kong-based crypto investment firm Kinetic Capital. The Bitcoin price, boosted along with equity markets by massive government stimulus measures throughout 2020, the last year climbed back to its 2017 all-time highs of around $20,000 per Bitcoin. A similar trend can happen now as the President of the United States plans to give a stimulus boost to the economy, which will be 3 times the last package at around $2,000. Number 4, institutional interest. More institutions are warming up to the idea of crypto, which increases demand. In the current macro environment, some may view crypto as a hedge against potential future inflation. Looking to future markets, institutional demand has certainly helped drive Bitcoin markets recently. Average daily interest in CME Group Bitcoin's future rose 233% in Q4 2020 as it did in the same period in 2019. Additionally, the number of large open interest holders in Bitcoin's futures rose to its highest level ever in December, with 110 large traders holding more than 25 futures contracts, equivalent to 125 Bitcoin. And finally, a regulated futures market. Institutions that include crypto in their portfolios need a trusted venue to manage risk with price transparency and liquidity. The launch of the CME Ether futures contract provides institutional investors a regulated market in which to get exposure to price movements without having to handle the digital asset or deal with concerns about wallets, custodians, insurance, or other barriers to entry. The Ether contract enables participants to invest in and access the cryptocurrency markets while also managing any crypto-related risks. The Ethereum price is bouncing back after it fell sharply a few days ago. Ethereum is trading at $2,440, which is just 4.75% below its all-time high of $2,550. The currency has surged by more than 25% from the lowest level on Sunday. Ethereum's price has recovered most of the losses it made on Sunday this week. Notably, it is surging at a time when Bitcoin, Ripple, and other popular currencies are struggling. This performance is mostly because of the vibrance of the decentralized finance industry. The total value locked in the industry has surged more than $59 billion. It has also recovered after it dropped to $55 billion yesterday. This trend is partially because of the Maker, which is set to launch a new product that will use real assets as collateral. Also, the TVL of other popular decentralized finance projects like Compound, Uniswap, and Aave has been rising. This is notable since, while other platforms like Solana and Elrond are rising, Ethereum is still the biggest player in the industry. So what's next for Ethereum prices? Ethereum's price was still heading to $3,000. This was a relatively controversial note considering that Ethereum was in a major sell-off at the time. On the daily chart, we see that the price is being supported by the 25-day and 15-day exponential moving averages. This is usually a sign that the price will continue moving in that trend. Also, we see that the super trend, which tends to be an accurate indicator, is still bullish. Therefore, suspect that Ethereum will keep rising as bulls target the YTD high of $2,560. If this happens, the next key level to watch is $2,650. In the long term though, the price should keep rising as the bulls eye $3,000. Thank you for watching, and that's all for this video. If you liked this video and it helped you in any way, please give this video a like. And if you don't want to miss out on any future videos, subscribe to the channel. Hope to see you in the next video. Till next time, see you guys later.